you go. It's amazing how quickly a company goes from everyone asking you, when are you going to raise money next, to now, what are you going to do with all your money? So you're either either way, no one's ever happy.
Yeah, no one's happy. I found that out, Matty.
So what is the plan on the capital management? Because at the moment, like we can see here, there's plenty of potential to spend it organically as well, but based on
I don't think we could spend that much though. Our exploration budget is sort of 10 million a year. And we've been making 20 million a month. So
there you go.
That's, I don't think we're going through that much.
You'd have to have a big underground to spend that, mate. So
and also, the underground, I think we get ore probably about 100 metres off the pit. So, there's not a huge amount of capital to do there either.
This is general advice and my opinions only. This episode's company has paid me for this interview. I may be long, short, or hold an interest in stocks or CFDs mentioned. Past performance isn't reliable. The interviewee's views are their own, not necessarily mine. LEVRD operates as a corporate authorised representative 00131 8377 under AFSL 548573. You can find our financial services guide via the LEVRD website, link in the show notes.
Righto, bag holders and stop loss owners. We're going from the original New Murchison after speaking to the potential new Murchison yesterday with Great Boulder doing a similar deal. This is the OG, you'd say. Alex Passmore, MD of New Murchison Gold. Welcome to LEVRD, mate.
Thanks, Matty. Pleasure to be with you.
Pleasure is all mine, mate. Now, I will say straight up, I'm not going to crawl up your ass, but I think credit is due where credit is deserved. The journey your company's been on, and yourself, you've come from your geo, but come from the finance background, and you've secured all this tenure, but then done a deal with Westgold that was probably, and I've mentioned it before, that was maybe have been perceived negatively at the time in the market, thinking that you've given the competitive tension of New Murchison away by Westgold coming on and doing the OPA with them. But you have exceeded, I believe, expectations of everyone with the amount of cash is printed. You've got 150 mil cash without building a mill and progressing towards 200, and you're a mine operator now. So, mate, on behalf of the LEVRD team, well done. Well done, I would say.
Thank you, Matt. And it has been an exciting couple of years, and I know that you've followed the story for some time. I know that from previous conversations, we both debated whether, who was the best counterparty and how it was all going to play out. Look, it's ended up being, being a really pragmatic way to get into production, and and has been good for the Murchison region and the Meekatharra region, as well as our own shareholders.
Yep, very much so. Right, I'm obviously a current holder. Full disclosure to the listeners of NMG, and you're in a great spot with the cash position, but I want to delve into today to look at the growth of where this could be going, if that cash is going to go up or it's going to get used elsewhere from an investment point. So, and before we get into that, I do want to know if you can say, were you involved in the Peak Hill sales process? Were you having a look at it?
Yeah, we were in the process. So while we're not getting distracted from production and growth at Crown Prince, we keep an eye on the horizon for assets that may be available. As these only come up from time to time. So we had a good look at it. We need to weigh that up against the opportunity cost of investing in exploration and developing our own portfolio on our own ground. Clearly, we didn't end up buying it, so you can join the dots there. But look, an interesting asset, and I'm sure Great Boulder will be very, very busy, progressing that asset. So there's a few other interesting things to come out of that whole process. So, Westgold are obviously, getting very good at OPA processes, and and are looking at filling their mills across the region, via that model.
Yeah, very good. I thought you might have been looking at it. Now onto the company's position at the moment, I'll bring up the chart. She's pulled back a bit. You can see here, sitting at about, I think it closed at about 4.7 today with, gold's out of flavour, but it's going back up at the moment. But you look at it, 520 mil market cap with 150 mil cash. And do you think at the moment are investors or people thinking, right, you do have all this cash, but where is the growth? Is growth the thing you're getting asked about the most at the moment?
It is one of the I think there's been on the negative side of the sentiment, you're absolutely spot on. Gold has come off in terms of price, but also sentiment. With a flight to the US dollar, as the Iran war sort of gathered pace, and we've suffered a bit from that. We put out a really strong quarterly result in terms of cash build, and we think that will certainly that sort of level we're very comfortable with continuing. So we think that the pullback in the sentiment for all the junior golds has definitely affected us. Yet we are building cash, and so our enterprise value is getting cheaper and cheaper. The thing that we get asked about a lot is not only growth but also mine life. So we have an open pit at Crown Prince with about 2.5 years to run, and then we have satellite pits which add to that picture, and then we have a potential underground at depth. So we can see that we've got plenty of life, but it's up to us to prove to the market that we do by updating our reserves, which we're and resources, which we're constantly working on. So yes, absolutely, growth and longevity are key questions that we get asked, but we're doing the work, and we're doing the exploration to solve those to answer those questions.
Yeah. Okay. I'll start with short term, and then we'll head into the long term. So I guess everyone wants to know, like, right, are they going to be printing 60 mil every quarter for the stage 1 and stage 2 of the open pit? Because I saw in your last quarter there was a bit of the grade drops from sort of 4.2 to 2.8, because averaging 3 grams for an open pit is sensational in this market, even when you're paying it into getting paid via an ore purchase agreement. You're coming sort of to the end of stage 1, you're going to be starting stage 2 again. Yep. What does the grade profile look like for that sort of 2.5 years of the first Crown Prince pit?
Right. So broadly, it goes up towards the end of the life. So our reserve grade is 4.8, and we are confident of getting that. So we have introduced low grade ore to the mix more recently, and that was really to take advantage of strong demand from Westgold Bluebird for tons. And so that brought that grade down. So, it's a combination of opportunistically, selling low grade and putting that blend into the mix. So, material that we have, would have mined anyway, being in the pit envelope, but that may have gone to a stockpile for later on in the mine life, or if we had a different milling solution, or had a heap leach or whatever, has been put into the mix because there was demand for it. The gold price was also $7,000 Aussie at a lot of times during that quarter. And so, we were able to make money out of blending in the low grade. So, maximising the NPV, with the prevailing conditions that are in front of us. Yeah. So going forward, we don't think, we see less low grade going into the mix now, and that is because the gold price has obviously dropped from 7,000 to 6,300, 6,400. Diesel prices have gone up, so the cost of power for crushing and the cost of diesel for hauling and all that sort of stuff has gone up. So we are pulling some of the low grade out of our production blend, and so that'll see a grade lift, and also naturally we will the ore body does get sort of more constrained, more discrete, fresh, coarse vein hosted, high grade as you go deeper. There's various areas in the supergene that are sort of a bit squibby, but go grade. So there's less of a low grade halo, if you like, as we get deeper in the pit.
Yeah. So stage 1 to stage 2, explain that to us in terms of capital required for, I assume stage 2 requires an initial cutback, or is that going to be done progressively? Or
yeah, so we've been doing that progressively. So. Yep. So there's no capital required. We've just been expensing the tons as we mine them.
Okay.
And so that operationally that's been a key focus for us. So we've now got 3 dig fleets on site. And they're going hard bringing the stage 2 pit down to meet the stage 1 pit. So the crossover is in July and August. And so, that's what we're looking to, get stage 1 and stage 2 sort of bottoming out at roughly the same time. So that opens up a huge amount of ore for us. So once stage 2 is opened up at it's about 55 meters below ground level. That both sort of meet, stage 1 bottoms out and then they meet. So yep. We are moving a fair bit of waste at the moment, but that's we were also doing that last quarter as well. So that's that's sort of reflected in those mining costs as well. So there's no capital required for stage 1, stage 2. It's just stage 1 let us dive down early on to get plenty of ore, but then when as stage 2 catches up, the strike length of the ore body increases. So you get the additional ounces from either end, and also there's another ore body to the north of sort of the centre of the current pit, and we call that main ore body and northern ore body, and then that provides a lot of ounces in the stage 2 pit. So because it wasn't the focus of stage 1.
Yeah, gotcha.
So you can see in that image you've got up there, that sort of that lobe on the sort of backside of the pit that's closest to the creek. That is mob and knob, or main ore body and northern ore body. So they're actually areas that were first, that were already known mineralisation. There was a couple of old shafts there that were first mined in the early 1900s, and they, so that area is coming down as it's not as good as the southeastern zone, the main area you can see in the foreground, but is a big part of the stage 2 pit. Yeah, as in contributes while we're transitioning from stage 1 stage 2.
Yeah. Okay. Before I go on to the additional pits, we'll just stay on the Crown Prince pit and talk about the potential underground and when you might be actually cutting a portal into there. So where's that all at? I'll actually, you know what? I'll fire up the Toad. Have a look at this. I've even got the Toad. This was the drilling you just did below the Crown Prince pit. So I assume we're looking in the right spot here. I'll zoom in. Can you talk to me about what is actually happening with Crown Prince underground, level of confidence, and when there might be a bit of how much of a mine plan is already wrapped around it and to be done to actually start getting into it possibly?
Sure. So, okay. So what we're seeing from the mining experience so far is that Crown Prince globally is delivering about 1,100 ounces per vertical metre. So, as you'd remember from your underground mining days, they're pretty good metrics for a gold mine. That really is about 400 metres long in strike, and about 300 metres across in terms of both ore bodies. So, we see it being a robust, modest scale underground, producing around 3,000. 3,500 to 4,000 ounces per month, and at good grade. So the ounce profile comes off a little bit because there's you can't just with underground you can't take everything that you might in an open pit. but it certainly looks like a very good underground proposition. So we're working on a resource update and reserves for that now, where we will have an underground feasibility study out in Q3 of this calendar year, so the September quarter of this calendar year. So that's a key thing to look out for. And we are looking at potentially getting stuck into some early works, in the last part of this year, so September, October. So
is that like, looking at it here, Pasty, is that like they're the main two underground loads that you'll be targeting? Yep.
Yeah, exactly.
Yep.
So Mob and Nob and Seb. Yep.
Yeah. Gotcha.
And so high grades down there. You're sort of talking 8 gram type material. It just depends on how the stope optimization process sort of goes. But in terms of raw, sort of blocks at the moment, we can see plenty of 8 gram material down there.
Yeah. And so are you going to likely be cutting a portal as the pit is progressing down, or are you going to wait for the pit to be finished, or what level can you start attacking an underground?
So one of the things that we are looking at is that we could do some early work. So we will need a vent portal, and then we'll need a main haulage portal. So the main, we've always sort of thought the main haulage portal will come off near the bottom of the pit, so at about 100 meters down below ground level. But we're looking actually at where the vent portal would come off the bottom of the pit, and that might be around 70 to 80 meters off the bottom of stage 2. It's off the side, and the reason for that is, as you can see in that image, there's ore sitting behind the pit that we can't get to because it's in too close proximity to the Garden Gully drainage. So, so that is easily sort of accessed early tons from an underground, and we could potentially, start a portal which becomes a vent portal, in due course, and then just push air in there. Rather than ahead of the full ventilation system going, so that we are looking at that. That could be as early as September. That's probably a bit hopeful, but September, October, we'll be down at that level and be in a position to get stuck into it.
Does that give? Are you looking to do drilling from the underground as soon as you get in there?
That as well, but I mean, it'll give us, so it'll also give us time to ramp into production in underground. We'll still be having ore coming from the open pit. As things take time to ramp up. It's usually a bit of an education process, working out what ground conditions are like, what any other, sort of issues, we're not expecting any dewatering issues, but all of that sort of stuff. Production cycles, have we matched the right equipment for the right size, for the size of the mine? All of that sort of stuff. It gives us time to work through that, while still getting ore from the open pit.
Yeah. Okay. So, and explain, because we're going underground, I think of water. Water's a big one. And we knew, when you were initially developing Crown Prince, with the interaction with the creek, the pumping out, and I will note, correct me if I'm wrong, one of the legendary water people in Western Australia is a bloke called Roger Passmore.
Ah, yes, that's right, Matt. Thank you. That's
so right, you tell you what, you got. If we've got anything to do with water, we've got the right surname on the job here. Just pointing that out. What is there? Once you go underground, is there going to be any interaction with the creek or proximity to it? Or?
Yeah. So there's so the water that we do see at Crown Prince is in very discrete fractures, in and along. A couple of shear zones and sort of foliation parallel shear zones that run north, east, southwest. They're very discrete, and they're not in connection with the pit. With the creek alluvials. So the creek alluvials do contain water, particularly in the wet season when a cyclone comes down. But there's 50 meters of saprolite clay, and then bedrock beneath the creek alluvials, which separate it from the fractured rock aquifer. So we have monitoring bores in the creek, and we have monitoring bores in and around where we're dewatering the pit. And there's zero relationship between what we see in the mine to what the water levels are doing in the creek. We're pumping from the mine area and seeing zero change, in water levels in the creek. So no connection. There are plenty of places where you see underground mines below drainages. So St Ives would be a good example. That's under a lake. In between Kalgoorlie and Kambalda. Plenty of underground mines go below drainages and lakes. Sunrise Dam, I think, does. Some of the ones out near Lake Cowan. So as long as you're not sort of draining the surface drainage, you're okay.
Yeah, copy that. Mate, next cab off the rank, is it going to be Lydia or Crown Prince East, or what is your thinking? And that's where we'll go next.
Sure. So Crown Prince East is a part of our approved mining plan. The approved, DMP approved, ready to go. So that's the next, that's a satellite pit that is going to be started within the next couple of months, and then Lydia after that. So Lydia needs to go through a bit more in terms of we need to do a bit more dewatering study work on that, and we've just finished heritage and the final round of heritage survey. It's a very detailed 6 metre grid type survey, EMU pick sort of survey, EMU bob survey, I should say. So that is we now have got maps of any sites of interest. We've got a good understanding of the hydrogeology. We've got a good understanding of the geotech, but Lydia is just a couple of months behind Crown Prince East in terms of being brought into production because of all those things.
Yeah. Okay.
So Crown Prince East, not as big as Crown Prince. It's definitely a satellite pit, but as you can see from the figure there, there's about just over 100 metres in strike. It's a folded shape with a high grade in a north-south structure, meeting a southeasterly dipping lode. Right in between Crown Prince and our waste dump, you can actually see the bottom footprint of the waste dump in the top right-hand corner of that photo.
All right.
So very close to the ROM. We're looking forward to getting stuck into it. There's some good grades in there, and very similar metallurgy to Crown Prince main pit.
What's like an anticipated mine life of Crown Prince East, do you think, on the scale of this?
So it's not, it's not like we're thinking 6 months and 25,000 ounces or something like that. It's not it's not the world's biggest pit, but it's handy. And there may be some connection between Crown Prince Main and Crown Prince East underground. But that's something that we're thinking about too.
Yeah, gotcha. So onto Lydia. So if we say that's project number 3, open pit project number 3. So what sort of scale can we say Lydia is compared to your Crown Prince pit at the moment?
Yeah, so it will be between the two in terms of scale.
Yeah.
So, so we see Lydia as, not quite as big as Crown Prince Pit, but having good underground potential, and having, very good grades, and it'll be a decent open pit. There is a bit of a pre-strip on in some areas in Lydia. So, it's a plunging chute, plunges down to the north. So we'll start in the north part of the pit and then work our way south.
Yeah, gotcha. So
it plunges to the south, I should have said. It starts in outcrops in the north and plunges to the south. So we'll start in the north and then work our way down.
Yeah, gotcha. So okay, so what's in the pipeline? So you've got Crown Prince Pit you're currently mining, you've got Crown Prince East, you've got Lydia, and then the potential Crown Prince underground. Is that sort of the pillars at the moment?
Yeah, that's right. Now our feasibility study, that is looking a bit outdated now. It was released in February 25. That only dealt with the Crown Prince open pit.
Yeah.
So Crown Prince East will be in addition to that. Lydia will be in addition to that, and the underground will be in addition to that. So that's part of the growth story. So, so we look forward to updating the market on that, later on this year.
So did you say about September? That's
Yep.
yeah.
Yep.
Okay. So that's gonna have the, I guess, what everyone's chasing, the multi-year outlook with all those 4 operations.
Yeah, exactly. And so the I guess it's just been a matter of permitting and drilling to bring those into that that sort of study category really.
Okay. Is there much infill drilling to go to get all of that ready?
No. It's a Crown Prince East is grade control drilled.
Yeah.
Lydia is pretty much grade control drilled. And metallurgy well understood, geotech well understood. So no, and not a lot of capital either, given we'll leverage off the existing office, the existing crusher, all the same sort of stuff, that we're using at Crown Prince. So it just sort of feeds into the same the same platform.
Righto, I got my head around that. Okay, so let's hypothetically say we've got there's potentially a 4-year outlook for the business.
Yep.
But as you said, you've got a lot of tenure in this region, and I understand from the size of your business and the position at the moment, you can't do everything as much as you'd like to. That's a lot to focus on, just those four pillars. But how much attention's been put towards the greenfield exploration across your big tenure at the moment and in future?
Yeah, so we're just turning back to look at that. We've been sort of had 6 months of production from Crown Prince, and that's going well. So now we were drilling we've been drilling at Crown Prince East, we've been drilling at Lydia, we'll be drilling the underground. So now we're starting to turn our attention to regional and longer dated growth prospects. So Abernathy South and Airstrip are key areas to watch in the south. So the Abernathy shear zone is this big regional shear that strikes northeast southwest. And that's basically the margin of the Abbott's Greenstone Belt. And there's some, I think there's some good grades. You can see down in the southern part of that figure there, 10 at 41, 15 at 2, 3 at 8. There's some pretty impressive grades at Abernathy South. Now that's a 7 kilometre long, pretty coherent anomaly over 1 gram. So that, it was first drilled really by Western Mining's Gold Division when they had one back in the late 90s. So they'd identified it as, a key, sort of had all the right ingredients, big fault, big shear zone next to a greenstone belt, had all the right geochemical, anomalism. And then they sold their gold business to Goldfields. I think it was in 2000. So then, not a lot of attention was put on it. Then Dore came back and after many years and had this ground. But and they did do a fair bit of work on the Abernathy area, but then they were focused on getting Andy Well up and running, which is to the north. So then it sort of got overlooked a bit then. So we're going back and giving it a red hot crack.
Very good, right? So it's amazing how quickly a company goes from everyone asking you, when are you going to raise money next, to now, what are you going to do with all your money? So you're either either way, no one's ever happy.
Yeah, no one's happy. I've found that out, Matty.
So what is the plan on the capital management? Because at the moment, like we can see here, there's plenty of potential to spend it organically as well, but based on
I don't think we could spend that much though. Our exploration budget is sort of 10 million a year. And we've been making 20 million a month. So
there you go.
That's I don't think we're going through that much.
You'd have to have a big underground to spend that, mate. So
and also the underground. I think we get ore when we develop off the pit. So the ore body is probably about 100 meters off the pit. So there's not a huge amount of capital to do there either. There's obviously a bit of infrastructure to set up with vent fans and so forth, but not too bad. So what are we doing? So with the money, the plan is, look, we are paying. So we had a large tax loss balance. We had 83 million in tax losses. So we've gone through all of those. So we're starting to pay tax. and that gives us franking credits, so we could consider franked dividends. It's a rolling agenda item on, for every month's board meeting is, capital management. So, do we look at paying a dividend? Do we look at paying a sustainable dividend? That is, do you do a special that is, a big lump sum that says, well, this is sort of money from Crown Prince open pit? Or do we, have a sustainable dividend that is more likely to appeal to, dividend funds or people that are interested in getting a dividend, something that can be linked to the company's sustainable earnings? Or do we do a share buyback? If the company is in, a position that it's really undervalued, and we thought that was a good idea, we'd look at that too. So, but for the minute, there's a war in the Middle East. We've got lots of plans, so we're happy to have the money locked away, earning interest and being there, as a buffer for some of these development projects, as required. But yeah, we are closely looking at all of those options.
So how, if you're from the world of finance, and if you look at it at the moment with the pullback in the share price due to what's going on in the Middle East, and if you do have the franking credits available to issue a dividend, what's the pros and cons of initiating a buyback now versus doing a dividend? Well, is there it's a different investor base that you're going to attract possibly, or
Yeah, absolutely. So and then so then you've got to question how many investors buy. Yeah, so dividend investors tend to focus on long-term annuity streams like property trusts and so forth, banks. So resources companies aren't usually the first companies that dividend or income funds think of. But obviously, when you're making sustainable earnings, you can pay a sustainable dividend. So I remember Westgold used to do that. There's a few other companies that if you get a pipeline of projects and sustainable earnings, you can pay a sustainable dividend out. Now there are in our top 20 shareholders, there are a lot of people that would like to see a dividend. So that's why it gets seriously considered.
Yeah. Okay. So the buyback's better for people like me, but the dividend might be better for the people that you're answering to a lot more often.
Yeah. Probably. Yeah. I'd say that's probably right. Yep.
Yeah. Very, very good. Mate, what's the vision here? What are you aiming to do? Like, you might have been good luck to you if you were just trying to flip this for a takeout and go retire on a beach, because it hasn't happened. You've got a bloody mining company here to run now. With all this tenure and projects, is there an aspiration for what you want New Murchison producing in the future, quantity-wise?
Yeah, so look, a meaningful production rate is really 120,000 ounces, and that's sort of a minimum that any gold company should aim for, and we're not going to do that without our own plant. So but to have our own plant, our resource base needs to be a lot bigger. So sort of explore, in the belt. We're looking for a deposit that's going to be a sufficient scale to underpin a plant, and then see where we go from there. So it's resource growth followed by production growth. That's the vision.
But I guess what you've said is what conventionally 120,000 ounce producer should be, but I'll go back to the point. What you've done is unconventional, but it's worked. Like, is there a world in which how the relationship with how Westgold are structuring all these arrangements with yourself now, Great Boulder, and they've got Valiant, they've got potentially Alicano and all this, that there might be a feasible situation where there's these subsidiary businesses like yourself that are doing the mining and just delivering them ore long term without them having to expand their team to do it themselves? Like, is that realistic?
Well, it's sort of remember, I think when we're the only one that's currently doing it. So that would be that, I know that the way that it's been set up is that Valiant and and the others are ready, are trying their best to get into that pipeline, and I think that's that's great. I think it's got implications for us as the market becomes a bit more crowded in terms of potential sources of ore. So we've got to watch that. Does that create some some downside in terms of other ores competing in the same spot that ours is for Bluebird? There are also other mills in the region, so there are 3 others that I can think of that could take our ore if the world was to sort of fall in, but hopefully, well, not the world fall in, but the relationship not be as as good as it is now. I don't think that's at risk. So I think we work very well together. So I think Westgold might be on the right track in that they were in a position with lots of mill capacity, and now their mill, is full, and it looks like they've developed a pipeline, going forward. So that they've handled that very well, and they've done a good job. Yet they've also given us the opportunity to get into production, and they've been a supportive shareholder. So, you couldn't ask for sort of much a better partner in that sense. My conversations with Westgold have always indicated that they're keen to support us, and there'll be or capacity for our ore for a long time. So
I can understand why you got to be fluid with it, but because it might be contingent on the Bluebird expansion for long-term future if there's other sources going. So you can't be held at the mercy, can you?
No. But look, I mean, it's a fair way off. And like I say, we've got a great relationship. So those, that we'd usually get that, we'd usually be included in the plans going forward.
Yeah, well, and you haven't been knocked back to send more ore than the maximum amount yet, so you may as well make most of that at the time.
That's true.
Yeah.
So all going well.
Very good, mate. Right, that's been
very good.
Great fun. Go Gold and go the Murchison. Good to be back in. I've done some random chats so far, helium and ammonia. Good to be back at me roots, Pasty.
There you go.
And much congrats again. I hope Sammy's enjoying it up there and keeping everyone in line. Which I'm sure he is. And I'm sure he's going to love that he got a mention. Too easy, mate. Enjoyed it. Appreciate it.
Thanks, Matty. Cheers, mate.